So in managerial accounting, you will be asked to use the Dupont formulas, the Dupont model, in order to figure out certain aspects of a business that you want to manage or improve. So this should be really familiar to you. You learned it in accounting. And to start, we first want to take a look at what a basic income statement is. So if you remember, an income statement always starts off with revenue, or in other words, sales, and that equals just price times quantity. And then afterwards, you'll subtract the cost of goods sold, which is direct materials plus DL plus manufacturing overhead, aka manufacturing costs, and that will give you your gross margin. Now, something to note is that if a question asks for your average gross margin, that just means you take your gross margin divided by your revenue. With that, you're going to want then take off all of your period costs, which are also known as SG&A, selling and administration, and that will give you your operating profit. Now, operating profit, if you're asked to find the average operating profit, then just know that that is your operating profit divided by revenue. So then finally, that's generally where we stop in managerial accounting. But for the final exam, you will be asked to include taxes. So after operating profit, you subtract taxes to find net income. So once we know these, and once we're familiar with that, then we can take a look at the Dupont model. So the Dupont model is just the return on assets, and this is given in a percent, equals return on sales, which is a percent, multiplied by the asset turnover, which is not a percent, that is just a number. So operating return on operating assets is simply just your operating profit divided by your operating assets. Now, one thing to note here is that because we're focusing on managerial accounting, we want to focus on operating profit and operating assets. That means that we only want to include profit that is an active income as listed here. So we don't want to use any profit that is derived from interest income or interest expenses or dividends income. We only want to use active forms of income. And so that should generally just be given to you as income on the exam. I don't really think they're going to try to trick you with that. And then also you're going to only want to use operating assets. So do not use any assets that are stated as assets currently not in use or non-operating assets. Again, you only want to focus on assets that are currently being used by the company. So operating assets. So yeah, that is how you find the return on operating assets percent. To find the return on sales percent, you're just going to take your operating profit, same as before, and divide that by your sales or your revenue. Simple as that. And to find your asset turnover, you're just going to take your sales divided by your operating assets. So asset turnover is used to describe how efficiently you are using your assets to make money. So if it ever asks you to look at how efficiently a company is using its assets, then you're going to want to use asset turnover. Now, two things to note. First of all, operating assets, for all of these, for operating profit and sales, you want to just look at the operating profit and sales of the current year. So let's say you're doing year 2016, and this is the end of the year. Income statements are always given at the end of a period. So you're going to want to use the sales and operating profit from 2016. But if you're doing return on assets or asset turnover, you don't just want to use the balance sheet and use the balance sheet from 2016 to pick out operating assets, because those are only the assets at the end of 2016. But instead, what you want to do is look at 2015 and also look at their end of operating assets, because the operating assets at the end of 2015 will be the operating assets at the beginning of 2016. So what you want to do is add these together and divide by 2 to find an average of them. So you're going to use the average of the year before or the period before and of the end of the current period to figure out what the operating assets you would use in these equations. And the reason for that, again, is that these operating assets in the balance sheet are given at the end of a period. So by using the end of the period before and finding an average of that with the end of the current period, we're figuring out what kind of like the middle ground was throughout that year. So, or throughout that period. So again, for operating assets, make sure you take the period before their operating assets and find an average of them, of the two. So one other trick to kind of mention in these types of problems is that you want to scrub out any non-recurring costs or non-recurring income. Now, this is mainly important for non-recurring costs. If you see that there's an expense that doesn't happen every single year, and that's just happens one year, you want to not only take off that expense and get rid of it, but you want to add that expense back to the operating profit. So again, you're not only going to take off an expense that is non-recurring, but you'll have to add back that expense to the operating profit in order to use the correct operating profit. So that is how you use the Dupont model in managerial accounting. Again, just really know this income statement up here, and then know these three formulas. Make sure that you only use operating profit, operating assets. Make sure that for operating assets, you use an average of the current year's operating assets and the operating assets from the year before, because again, the year before's end operating assets is the current year's beginning operating assets. And one more thing is just remember to scrub out any non-recurring costs and add them back to operating profit. And if you do all that, you should be all set to use the Dupont model in managerial accounting.